Wow, Tesla stock approaching critical resistance levels on the back of very good news. We have all of it for you and much more here in this video, including Piper Sandler's estimates for Tesla's Q4 deliveries coming in over 500,000. I put out my official estimate about 510,000 deliveries for Q4. Piper Sandler's right up my alley. If they're correct, this could mean an explosive rally, potentially as high as $300. We'll talk about it here in this video, as well as the risks to Tesla stock right now. Let's go ahead and dive into all of this information, but let's start with the most important news first. Tesla China insured vehicle registration numbers for the week of December 18th through the 24th. You've seen 18,500 insurance registrations. Comparing this to the same week last year, insurance registration numbers were only 8,915. So you are seeing 10,000 more compared to last year's number. This means the total deliveries in China so far this year come to 594,274. Roland Percher breaks down the actual percentages. So this quarter is 17.2% higher quarter over quarter, 10.1% higher than the best quarter ever in China, which was Q2. 37% higher year over year. This is the highest 12th week of the quarter ever, and the third highest week ever in Tesla's history. I mean, I think it's time the bears wake up and hear the music. It's playing loudly. Tesla's business is not slowing down. It's actually accelerating faster than Wall Street expects or thought that it would. Tony Sacconaghi even recently went on to say Tesla going short in Tesla was one of his best ideas for 2024. If this kind of growth continues, I think that narrative is going to get blown up and short sellers are screwed. But again, I'm not just a perma bull. There's just a lot of things bullish for Tesla right now. The one biggest bearish risk for Tesla stock more specifically, is if recession fears come about. In that case, Tesla could fall big time. But until that happens, if that happens at all, there's just not a lot negative going for Tesla right now. Expectations are far too low in general for 2024. Tesla, for the last 12 months, has been priced as if we're going into a recession. If that does not materialize, big upside gains are to be had. But hey, what do I know? The second biggest piece of news is Piper Sandler expects Tesla to post 507,000 deliveries in Q4, 1.83 million for full year 2023. This comes from Piper Sandler analyst Alexander Potter. He reiterated an overweight rating and a $295 price target on Tesla. He says, quote, overweight rated Tesla will be announcing Q4 deliveries early next week, probably on January 2nd. We are currently expecting the company to deliver 507,000 vehicles in the quarter, implying a full year total of 1.83 million units. After considering the latest intra-quarter data, we think our estimate appears doable, though admittedly our forecast is perhaps on the high end of a believable range. Even if our estimate proves optimistic, we still think Q4 will set a record, with the annualized production rate exceeding 2 million vehicles per year. We expect margins will also rise versus Q3, given stable pricing and better fixed cost leverage. We will reassess our margin forecast once Q4 delivery results have been released. I imagine this means after Q4 deliveries, they're probably going to raise their price target if they come in good. Just based on what I'm hearing here on margins and reassessing margins, that's going to make the fundamental case for Tesla much higher in 2024. If margins have really bottomed and stabilized, Just imagine what that will do for Tesla stock. Tesla's margins bottoming, stabilizing, and then proceeding to rise is kind of like the equivalent of what we just seen with the Fed, right? The Fed's been beating down the markets for 18 months with these interest rate hikes. Now the Fed's saying we're prepared to cut at least 3 times in 2024. What did stocks do? Stocks rally big time. This is like Tesla's Fed moment. If Tesla can really see margins bottom and then start to get better from here, there's going to be a lot more money that comes into Tesla stock. Today is just the start. Tesla stock is currently up about 2% at $257.49 per share. We know a big level of resistance is around 258. If we get above 258 into the mid 260s, which could happen this week, then you're looking at a much larger potential upside move. As you know, in the land of big tech or mega cap companies in general, Tesla is very much under-owned. And if things start to look better in 2024, then I think a lot more money will come back into Tesla. Now, retail investors have really been carrying the weight of Tesla stock, the price cuts, the erosion of margins. Retail has been buying Tesla stock every step of the way, right? Tesla has now seen more inflows from retail investors than retail investors put into the SPY in this last year. For the first time ever, retail is getting more bullish on Tesla, whereas institutions really were never bullish on Tesla to begin with, but they have been very bearish on Tesla for a long time now. Tesla is trading at a record low valuation for Tesla's publicly traded history at a time where Tesla's business seems to be doing better than ever. We're expecting a record quarter from Tesla. I mean, those two things just don't make sense. Then you factor in margins, and that makes a little sense, right? Record deliveries, low margins, not record low margins, but pretty low margins comparative to recent history. Those margins improve. Tesla's business just continues at the same pace it's at right now. And I think fundamentally, you're going to see Tesla stock much higher in 2024. But before that even happens, analysts will start to raise their price targets. We've seen that lately with some of your most bearish analysts, even raising their price targets $5 or $10. But I think some much larger price target increases are coming after Q4 delivery numbers and ultimately Q4 earnings. Out of last week's vehicle insurance registration numbers out of China, still about 20% of registrations are the Model 3, about 80% of which are the Model Y, which we know Model Y sells for higher price points than the Model 3, so that should be good for top line earnings at the bare minimum for Tesla. Sawyer Merritt shares this article that says Russia has a new electric car that's totally going to destroy Tesla. It's over for you now, Elon Musk. The Amber is going to be unstoppable. Honestly, I don't think I've ever seen an uglier looking vehicle in my entire life. This car literally looks like it belongs in The Grinch. It looks like it would be a vehicle driven in Whoville. Gosh, I'm such a dad. That reference point is hopefully relatable. In other news, more than 7,000 U.S. car dealers signed up for point-of-sale EV credits. That's about 40% of all U.S. dealerships. The number is still expected to grow. Barron says, we need a new word for Tesla's recalls. I think a lot of people are confused that are not sophisticated Tesla stock investors that maybe just own Tesla stock and don't keep up to date with it like you guys might. They see recalls and panic a lot of the time when it's really just an over-the-air software update that we get all the time. This is also some pretty big news as well, and we'll talk about why a little bit more in this video. It says Tesla to reportedly adopt TSMC's 3nm chips in 2024 for its FSD chip, according to local Chinese media. N3P aims to deliver a 5% improvement in performance, a 5 to 10% reduction in power consumption, and a 1.04 times increase in chip density. Now, why do I think this is actually pretty interesting? Well, we know, or at least we think, there's rumors that FSD will enter the Chinese market officially, not just some vehicles here and there to test out FSD in China, but to officially launch an FSD where everyone buying a Tesla in China can purchase FSD if they would like, some point in December or January. Considering it's December 26th, probably January makes the most sense. TSMC, located in Taiwan, is very close to Shanghai on a proximity basis. This would make a lot of sense. The fact that we're seeing this news probably confirms this a little bit more, to me at least, that maybe FSD will actually enter China in this time frame that we expect. In the latest heat map climate poll, 35% of future EV buyers said Elon Musk had actually made them more likely to purchase a Tesla, up from 31% in February. People who said Elon Musk's behavior made them less likely to pick a Tesla in February 2023 was 36%. In November of 2023 was 27%. The heat map climate poll of 1,000 American adults was conducted by Princeton Strategy Group via online panels from November 6th to the 13th of 2023. The survey included interviews with Americans in all 50 states and Washington, D.C. So it looks like Elon's comments, controversy, is really not affecting the overall demand or implied future demand for Tesla products and services. But there is always that chance that some damage was done. Just to be semi-neutral here, I'm not oblivious to the fact that some people might not want to buy a Tesla now, but generally speaking, it really shouldn't do anything for Tesla's numbers. Tesla's global inventory numbers seem to be on a continued pathwards down. The Model Y, the Model 3, the Model S, and the Model X all falling. This is pretty interesting to me because if you check your local inventory, it's probably at one of the lowest levels you've ever seen before. At least for me and some of the people I've talked to, even in Canada, inventory numbers are very low for their demographic is the Model Y that's the most popular. My demographic is more the Model 3 here in Michigan. So there's like no inventory. Let me know what the inventory looks like in your area, if it's higher than normal or lower than normal. I've really haven't heard anyone say the inventory is just really high compared to what they were previously used to. So I'm sure somewhere that's the case, but let me know down below in the comment section. Google Trends data for the Cybertruck, Model 3, and Model Y seems to be stabilizing at least a little bit. The Tesla Cybertruck is at 28, the Model Y at 31, and the Model 3 at 34. Really not seeing much of a change here. And Tesla continues to run about 400 different ads globally. As you can see, Tesla is really highlighting the leasing options. You can see the first 3 of 4 ads here is for leasing of the Model Y, advertising it because it's a lower monthly payment, which makes a lot of sense. If consumers are truly not doing well, a $399 a month payment looks a lot better than $600 or higher. Believe it or not, today is actually one of the most volatile days for Tesla stock in any given year. This article is from Barron's. They say Tesla stock is up thanks to China. It's typically a volatile day for the stock. Here you can see this little chart says Tesla stock price move on the day trading after Christmas. Back in 2010, Tesla lost 15%. The couple of years after, up or down about 2%, normally up. Until 2017, you were down 2.4%. In 2018, you were up 10.5%. It's been pretty muted recently. 2021, you were up 2.5%. 2022, this day last year, Tesla was down 11.4%. And now Tesla stock is up about 2%. But normally Tesla does rise in this period of time. As it says right here, shares have gained 10 out of the past 14 post-Christmas sessions since Tesla became a publicly traded company in 2010. Today actually starts the first official day of the Santa Claus rally. Dating back to 1950 through 2022, we were higher about 58 times, or about 80% of the time, with growth in the S&P 500 of about 1.4%. That's better than any month historically in our markets. So this is notably a bullish period of time. And even over the past 5 years, if this time is again a positive return, you will be positive 5 years in a row. In 2018, you were negative. In 2012, you were negative. In 2008, you were negative. But besides that, since 2002, the last 20 years, you've been positive 17 out of 20 times. But the Santa Claus rally in and of itself is more like a market anomaly rather than a definitive fact or trying to put a reason behind it. The key takeaways here from Investopedia: the Santa Claus rally is the tendency for the stock market to increase during the Christmas season. Theories for the rally include increased holiday shopping, seasonal spirit, and institutional investors settling their books before going on vacation. Which I think most of you will find this interesting. 65% of large cap fund managers are losing to the S&P 500. 47% of small cap funds are missing the S&P 500 returns. So basically, hedge fund managers are massively underperforming the index. That's a problem, because if you're managing other people's money and a passively managed, let's say SPY or QQQ or other fund for that matter, is massively outperforming your return, well, good luck keeping clients. That's probably why this Santa Claus rally could be more bullish than not. IWM is up 1.2% today. As Tom Lee with Fundstrat says, a lot of fund managers are likely going to be chasing this market into year end and likely in the first month or two of 2024. Tom Lee actually expects small cap stocks could rally every month of 2024 due to just how beaten down they are and interest rates falling, presumably the economy avoiding a recession. That is all good for small and mid cap stocks. But wait, that means Tesla might actually rally every month next year as well, because Tesla fits the same criteria as small cap stocks. The reason why Tom Lee, for an example, is bullish on small caps is directly applicable to Tesla. Interest rate sensitivity, beaten down multiples and valuations, the main two principles on why you'd want to be bullish right now on small cap stocks, applies perfectly to Tesla. But instead, with Tesla, you also get a relative degree of safety. I think there's no arguing here. Tesla is a lot safer than small and mid cap stocks. Tesla is not going to zero unless asteroids hit their factories simultaneously, whereas small and mid cap stocks have decently high chances of going bankrupt. And again, back to my earlier point, if margins and business fundamentals actually start to improve for Tesla, as I expect they will in 2024, Tesla likely to actually raise prices in some capacity in 2024 as well, which will directly be accretive to margins. I mean, yeah, I almost feel bad for the shorts at this point. They don't even know what's coming. Tesla's option activity so far on the day today as well looks pretty good. You have seen 431 orders totaling $271.74 million with a positive order value of 56%. If you take a look at the volume today on the call side, about 61%. The volume on the put side, about 39%. So some very bullish numbers that we're seeing here. The short position in Tesla is currently $22.52 billion, still the highest single stock short position out there on our markets. Tesla represents about 2.5% of the total stock market's short interest, which really puts it into context just how short people are in Tesla, with a short interest of free flow at 3.28%. Oh boy, take a look at this one. This has to be the biggest piece of FUD, fear, uncertainty, and doubt, that I've probably ever seen before. Tesla robot attacks an engineer at company's Texas factory during violent malfunction, leaving trail of blood and forcing workers to hit emergency shutdown button. It says a Tesla engineer was attacked by a robot during a brutal and bloody malfunction at the company's Giga Texas factory near Austin. 2 witnesses watched in horror as their fellow employee was attacked by the machine designed to grab and move freshly cast aluminum car parts. The robot had pinned the man, who was then programming software for 2 disabled Tesla robots nearby, before sinking its metal claws into the worker's back and arm, leaving a trail of blood along the factory surface. The incident, which left the victim with an open wound on his left hand, was revealed in a 2021 injury report filed to the Travis County and federal regulators, which has been reviewed by DailyMail.com. While no other robot-related injuries were reported by regulators by Tesla at the Texas factory in either 2021 or 2022, the incident comes amid fears of heightened concerns over the risks of automated robots in the workplace. I mean, that has got to be one of the most exaggerated, almost fabricated articles I have ever read. As far as what's going on in our broader markets today, not a lot, but you do have this. The S&P case home price did come out. For October home prices, they post the biggest gain of 2023, despite higher mortgage rates. Home prices rose 4.8% annually in October compared with October of 2022. That's a jump from the 4% annual increase in September and marks the strongest annual gain seen in 2023. Among the top 20 cities, Detroit reported the largest year-over-year gain in home prices at 8.1% in October. So this is not exactly great for inflationary pressures, but hopefully it starts to kind of abate in 2024. At least there are expectations that home prices probably fall here in the winter months. Although, I mean, it's like 55 degrees here in Michigan today. Doesn't really feel like winter. I mean, here in Michigan, there was more snow on the ground around Halloween than there is now. In fact, there's 0 snow on the ground. As far as the markets broadly today, again, I think it's a lot of institutional investors trying to play catch up to what the indexes have done to get allocated to stocks before 2024. The writing is on the wall. Small mid-cap stocks, interest rate sensitive names are going to outperform. So that is what is outperforming today. Russell 2000, as I previously mentioned, up about 1.2%. The Dow, S&P, and the NASDAQ up less than half of 1%. So a very strong outperformance again today from the Russell 2000. Now, you do have a little bit of data coming out tomorrow. We'll talk about that in the next video. I'm really not expecting all too much. You do have a 5-year bond auction tomorrow as well that could move markets. But this week, there is 0 hard data, and for the first time since 1997, you do not have a single company with analyst estimates reporting earnings. So across the board, it's going to be a relatively slow week. Now, we can always be surprised by Tesla news, by what happens, with analysts on that front, but broad market speaking, there's just not a lot going on. 10-year treasury yields moving down a little bit, about 1 basis point today. Now, we will talk more about the technicals and where I think Tesla stock is likely to go from here in the next video that comes out at 8:30. I will tell you right now, I think Tesla is going higher from here into even year end and the start of 2024. I think we could see quite a rally. And that's exciting for a lot of us that have been buying the dip in Tesla every chance we get. But if you take a look at some of the technical indicators, the MACD solidly bullish, curling up quite nicely here to the upside. That's a good sign. The RSI at 61.47 is noticeably lower than IWM at 75. The SPY, which is sitting at 73, and the triple Qs, which tracks the NASDAQ 100, sitting at about 73. So Tesla looks pretty attractive on a relative strength basis because it's not overbought. It's definitely looking healthy, but has the potential to rally a lot more from here before you're technically overbought, which should give us enough room to break out of these key resistance levels. But we'll talk about this more in depth in the next video. That is going to do it for this one. Hit that like button and subscribe to the channel. Let me know what you think about all of this information down below in the comment section. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. We are killing it over there. Again, it's going to be a pretty slow week for this week, but starting off in 2024, there's going to be a lot of trades to be had, especially as we kick off earnings season again. We have our own strategy that really no one else employs for earnings that can turn small amounts of money into thousands of dollars. I highly suggest you come check it out, come give it a try, come join us, come trade with us. Results are not guaranteed. You could lose all of your money if you're not financially disciplined. Just like these videos, this is never a recommendation to buy, sell, trade anything. Contact a financial advisor, a financial planner, if you are confused or you don't understand these things or cannot accept accountability for the risks that you take. If you don't even understand the risks, well, that's probably the first thing that you should study. But if you'd like to come join us, regardless of your skill level, check that link out down below in the description of this video. There's almost 200 members in that group, so you're definitely not the first. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.